This is the FFR Trading Market Minute, and this is the SPY on a daily candlestick chart. Back on the 4th of December, I had pointed out that we were overbought in our RSI here, and that might be a sign that the market may be peaking here. We had hit my upside target for the year, which was that 600 level. That's the level I felt we'd get to before the end of the year, before we started to see any appreciable decline in the market. We had our downside targets here. Well, yesterday, which was Wednesday, the Fed made their announcement on interest rates. They cut another 25 basis points, but said moving forward, maybe not to expect so many rate cuts next year, maybe 2. So market didn't like that. S&P dropped about 17 points. Obviously blew through the moving average support here all the way down just close to our second target below that. There's a gap to fill below here as well. But we have reached an oversold position on the RSI here, similar to what happened back here. And you can see that bottomed right in that support there. We haven't quite got to that support yet. Market opened above yesterday's lows. It has been selling off today. We'll see if they're able to get into this support here. And the next level would be to fill that gap below. But like I said, because we are oversold here, it's possible that the bottom, short-term bottom, may be in here before we get some bit of pullback, and then maybe a rollover again to test this support again. This shouldn't be a surprise. Again, we looked at the VIX last week. We said the VIX was in a position where we could see some type of bounce. We talked about Warren Buffett having the largest cash position. You see his Buffett indicator here, strongly overvalued. That is the S&P. The Shiller PE ratio is above 30, another indication the market is overvalued. And we have a current Hindenburg omen over the market. Right? That's a sign of an unhealthy market. And typically you see a Hindenburg omen signal precede a market crash. So you put all those signs together, at least you've got to be protecting your downside here. We've been talking about that, but the market was certainly due for some corrective action. So again, it's possible that we could bounce from here, from yesterday's low, but we're just shy of the support here, and then a gap to fill below. So it won't surprise me either if they eventually over the next few days come down and close this gap here before we get a rally. But being oversold here like we were here, right? That was a low point. Again, here, low point before we get a rally. Back here, right, when it's oversold right here, that has been the bottom in the SPY. So that certainly could be a bottom point on that news that the Fed unleashed yesterday, but we'll see how this plays out. Economic data set to be released next week. Monday's consumer confidence. Tuesday, we've got durable goods and new home sales. And Thursday's initial jobless claims. Well, this will be the last edition of the Market Minute for 2024. We'll pick back up on January 10th. In the meantime, we wish you all a happy holiday and a great new year. We'll see you back in 2025.